Hello there and welcome back to Dukascopy TV. Now, economic sentiment in Switzerland improved less than expected according to today's ZEW report, giving rise to the argument that a strong Swiss franc and also weakening sales to the Eurozone and the US are putting Switzerland's economic future in jeopardy. Here to discuss the situation is Osmond Plummer. Osmond, thank you so much for coming into the studio.
It's a pleasure to be here.
Now, if we look at Switzerland's economic growth, it came to a staggering standstill in May when they said that the figures were about 5.2%. Now, do you think that given that in mind, do you think that today's readings are really usual of the current perspective in Switzerland, would you say?
I think what you are seeing is the effect of a prolonged overvaluation of the Swiss franc. Companies can adapt and adopt for relatively short periods of time, but even since the peg, if you like to call it that, was set at around 120 to the euro 2 years ago, the currency has stayed very much at the level that it was at that point, the 120 level, and this remains very expensive. Even if you look at the recent edition of the Big Mac Index from The Economist that came out this week, I know it's not exactly a scientific and economic indicator, but it does show that Switzerland continues to have, on a purchasing power parity basis, a currency that is far above the level it should be.
Now, taking this into consideration, Switzerland has become increasingly dependent on exports. Do you think in some ways, what do you think of the saying that Switzerland is a victim of its own success?
I'm not sure it was really its own success. It has had a very strong performance. The spike in the currency was simply because international investment was looking for somewhere safe. The dollar didn't look safe, the yen has gone out of favour, nobody likes sterling, and suddenly the euro is breaking up, so where do you go? So we go to the land of chocolate and cheese, but it's a small currency in value, and all the money chasing that put the currency to an unsustainable level. At this point though, who wants to go buying euros, who wants to buy sterling at this point? There's no actual downward pressure on the currency. People don't want to sell because they're not quite sure what else to put the money into.
That's very true. But if you think about the weakening sales to Europe, which I mentioned already, despite the fact that the currency has been capped, do you think that this means that the SNB are running out of tools to reignite the Swiss growth engine, if you like?
I think it's very difficult for the Swiss National Bank to do anything, particularly at this point, because the currency is relatively small in size and because the financial markets are relatively much larger. It would be greatly to the benefit of Swiss banks, of Swiss exporters, Nestle, the pharmaceutical companies and so forth, if the Swiss franc could reduce in value, then their goods be more competitive on the global market. As it stands, the high Swiss franc, if you're going to keep the Swiss franc revenues that these companies would like to keep, make Swiss made almost prohibitively expensive inside the Eurozone and in the dollar zone as well.
Another knock-on implication, if you like, is that to adapt to the ever-changing Swiss economy, they're having to look predominantly eastward, even increasingly so. So therefore, this doesn't mean that there has been an opportunity for the Swiss economy in terms of looking for other markets to explore.
Expanding Asia has actually saved the West from complete meltdown. It's not just Switzerland. If you look at areas like the luxury goods market, it's been demand in Asia that's kept a lot of these companies going, and it's been demand in Asia that has helped to keep Swiss finance and Swiss pharmaceuticals and so forth viable. But again, if you're coming from an Asian environment, unless you're in the very wealthy sector, Swiss goods, watches are very expensive. Now, if you're fabulously wealthy and you don't care, or you want to show that you've got a Swiss watch to demonstrate that you are fabulously wealthy, all well and good. Otherwise, these things are looking a lot more expensive than they used to.
That's very true. Now, talking about the Swiss franc, after the release of the ZEW report today, the dollar franc was kind of little changed, but with all that we've discussed, taking that into account, are you bullish or bearish looking at the Swiss franc going forward?
I am certainly bearish in the long term. I think the problem is timing. Anybody who wishes to make a 3-month or 6-month prediction is setting themselves up to be fabulously wrong. Bubbles can stay bubbles for a very long time. However, if you look in the medium to longer term, I do not believe this level of Swiss franc is sustainable, and I think it has to go back down more towards the 140 to the euro, maybe even back even to where it used to be, around the 150.
Wow.
That may come one day, but certainly another 15-20% is desirable from the Swiss economic point of view, and to make Switzerland competitive internationally.
Well, we'll certainly see after the summer whether that 150 mark is achievable. But Osmond, thank you so much for coming in and talking us through with it today. It's been a pleasure.
Thank you very much.
Thank you. Well, that's all from Osmond and myself for the moment. Click back to Dukascopy TV for hourly updates and, of course, today's press review. Goodbye for now.